Yo, Bitcoin Bulletin fam, get ready for a rapid-fire crypto rundown that's about to blow your mind. We've got massive moves in the market, groundbreaking ETF launches, and economic shifts that will change everything. Don't blink because this is happening now. First up, XRP is making waves, but is it a good thing? Then, we're diving deep into Bitcoin's astronomical climb and what it means for businesses. Plus, we're exploring how crypto can reshape economies and the future of financing. Stick around, you won't want to miss this. Hit that subscribe button and ring the bell so you never miss an update. XRP's record ETF debut crumbles under profit-taking. The first US-listed XRP ETF launched with a bang on September 21st, shattering records with an astonishing $37.7 million in day-one trading volume. This was the biggest ETF debut of 2025, a monumental achievement that should have sent XRP soaring. However, the celebration was short-lived as institutional investors engaged in significant profit-taking, overwhelming the bullish momentum and sending XRP sliding 3.46% in a volatile 24-hour period. The price action saw XRP swing between a high of 3.014 and a low of 2.91. Ultimately closing around $2.92. A dramatic midnight crash, quadrupling daily average volume, liquidated over $7.93 million, predominantly affecting long positions. Analysts are now watching closely to see if XRP can reclaim the crucial $3 resistance level amidst ongoing structural consolidation. The market is also assessing the impact of the ETF's secondary flows on liquidity and how Federal Reserve policy easing might influence digital asset markets. Can XRP break past the $3 barrier, or is a deeper correction on the horizon? Get ready for a deep dive into Bitcoin's potential $150K surge and what it means for global businesses. Don't go anywhere, because the crypto world just got a lot more interesting. Next, we explore how Bitcoin's potential surge to $150,000 is set to revolutionize business payrolls. Bitcoin's leap to $150K could transform European payrolls. Imagine Bitcoin hitting $150,000 by late 2025. It's not just a dream for investors, it's a potential game changer for European SMEs. This massive price appreciation is poised to drive widespread adoption of cryptocurrency payroll solutions, making it easier for businesses to attract tech-savvy talent and slash international payment fees. With $29.4 billion pouring into crypto markets in 2025 alone, institutional backing has stabilized Bitcoin's price, creating a more appealing environment for businesses to explore crypto payroll. Bitcoin is increasingly seen as a gold-like safe haven and inflation hedge, boosting its credibility as a payment method. The upcoming markets in crypto assets, SMEs, regulations in Europe are set to provide much-needed clarity, easing compliance concerns for firms looking to implement crypto payroll. While classifying crypto as property for tax purposes presents challenges, the benefits are undeniable. Lower transaction fees, faster international payments, and a powerful tool for attracting and retaining employees who crave modern payment flexibility. This shift also champions financial inclusion, offering access to digital economies for the unbanked in regions like Asia and Nigeria. Will businesses embrace crypto payroll to tap into a younger, tech-savvy workforce? Get ready, because the way businesses finance themselves is about to change dramatically. This is just the beginning of how Bitcoin is reshaping finance. Next, we uncover how businesses are leveraging Bitcoin as collateral for crucial funding. Bitcoin as collateral, the new frontier for business financing. In a stunning development for crypto-friendly businesses, Bitcoin is emerging as a powerful tool for securing liquidity without sacrificing ownership. Companies like CleanSpark are already demonstrating the value of using Bitcoin as collateral for loans, unlocking capital while retaining their digital assets and potential future gains. This innovative approach is gaining traction among SMEs and fintech startups, particularly in Europe and Asia, offering a non-dilutive path to growth. The advantages are clear. Businesses can access funds for operations, expansion, or managing expenses with greater speed and flexibility than traditional financing. However, the inherent volatility of Bitcoin presents significant risks, including potential margin calls and liquidations if the price plummets. Navigating the evolving regulatory landscape, especially with Europe's MiCA regulations imposing bank-like requirements, is also a critical challenge. Robust risk management strategies, including conservative loan-to-value ratios and diversified holdings, are essential. As the market matures, stablecoins are also offering a less volatile alternative for businesses seeking financial solutions. Can businesses effectively manage Bitcoin's volatility to unlock new funding opportunities? Prepare yourselves, because we're about to explore Bitcoin's massive potential in developing nations. But it's not all smooth sailing. There are significant hurdles to overcome. Next, we delve into the complex landscape of Bitcoin's impact in developing economies. Bitcoin in developing economies, a double-edged sword. Bitcoin is sparking global conversations, with its potential to revolutionize developing economies by enhancing financial access and stability. In regions where traditional banking is scarce or ineffective, Bitcoin offers a gateway to the global economy, enabling individuals to send and receive funds, access financial services, and conduct business without a bank account. This is particularly vital in nations battling hyperinflation or currency devaluation, where Bitcoin can serve as a more stable store of value, protecting savings. However, the path to widespread adoption is fraught with challenges. A significant hurdle is the lack of clear regulations in many developing nations, creating uncertainty and deterring potential users concerned about legal issues and scams. Technological barriers, including unreliable internet access and device availability, further complicate engagement. Bitcoin's notorious price volatility also poses a substantial risk, especially in already unstable economies, potentially leading to significant financial losses for individuals and businesses. While institutions like the IMF acknowledge blockchain's potential, they caution against outright cryptocurrency adoption, suggesting instead the integration of blockchain with existing currencies for greater stability. Will Bitcoin bridge the financial divide or amplify existing economic instability? Stay tuned for our lightning round recap and a full call to action. We've covered a lot of ground today, but we're not done yet. Next, we'll summarize the key takeaways and tell you exactly what you need to do to stay ahead in the crypto game. And that's a wrap on today's Bitcoin Bulletin. We saw XRP's record-breaking ETF debut overshadowed by profit-taking, explored how Bitcoin's potential $150K surge could revolutionize business payrolls, discovered how businesses are leveraging Bitcoin as collateral for crucial funding, and analyzed Bitcoin's complex role in developing economies. Don't miss out on any of the action. Hit that like button, subscribe to Bitcoin Bulletin for all your crypto news, ring that notification bell so you're always in the loop, and let us know your thoughts in the comments below. Follow us on all our social channels to stay connected. We'll see you in the next one.